All right. This will be the last chance to claim the Black Friday sale on Bank Trade Alerts, where you can still get 50% off your first month of bank. As you can see, we are absolutely crushing this market, currently sitting at all-time highs, and we would love to have you come crush the market with us. All you need to do is apply the coupon code Black Friday, all one word, no spaces, at checkout, and you will get 50% off your first month. So don't forget to take advantage of this Black Friday sale while it's still available. All right, first let's look at SPY, and we can see SPY was down 0.18% today. And ever since we filled that gap at 455, we've kind of gone sideways to down, even though we are relatively flat, going absolutely nowhere last week after this big push higher. And as you can see, we have two candles now below this support trend line, which is a very vertical bull rally. And I do believe we are going to start backfilling some of these gaps below, because we still do have 3 open gaps to the downside, and we have now closed all of the gaps to the upside. So respect that resistance at 455, because if we continue to pull back from 455, we could easily come all the way down here towards this gap fill at 441 and this demand zone between 436 and 440. Now, if we break through 455 and continue this very vertical rally, then we're looking for the next resistance levels higher, just below 458 and right around 460. Now, this is a very powerful bull trend, but every bull trend is eventually going to get a pullback to a higher low, and it is very difficult to call a top. So while it is likely we could be pulling back very soon, it is much safer to wait for confirmation. And right now, the confirmation would be a rejection from 455 and a break of this support right around 450. If you don't mind losing the trade, this would be a low risk entry if you're trying to short the market, but again, you are trying to short a bull trend, which is very difficult to do. On the Nasdaq 100 triple Qs, we were down 0.09%, and just like SPY, we are very flat, and we have rejected from that resistance at 393, and that is the resistance level we need to break if we want to get to that next price target higher up there at 404. Now, below 393, it's possible if we continue this rejection that we're very likely coming down towards this gap fill at 378 and to test this rising, positively sloping 20 daily moving average. I think that would be a very healthy pullback, and it would close one of the 3 gaps open. And if we continue lower below that gap, assuming we do break this support at 383, then we'll be looking for a test of the breakout right around 370. Now, if we continue higher and we don't break this support right around 387 to 383, then we need to break resistance at 393 and continue pushing higher towards 400 to 404. In the Dow Jones, we were down 0.14% today, and the Dow Jones broke through 350, hit the next price target at 353, and if we continue any higher, we're looking for 356 and then 360. If we can't hold this support at the breakout at 353, look for a retest of 350, and if we can't hold 350, we likely come down towards this gap fill at 344. On the Russell 2000 IWM ETF, we were down 0.33% today, and the small caps are looking the most technically sound because we are getting plenty of consolidation, and we're currently in this triangular wedge, and we did already have the pullback back here in early November, which meant on the small caps we already have our higher low, higher high breakout, which means we're bullish as long as we're above 174. So in the small caps, you can stay bullish above this very nice risk level at 174, and if we continue to push higher and break out of this wedge, we're likely going to start pushing higher towards 190. Now, in order to get to 190, we're going to need to break this resistance right here, right around 180 to 181, which is also the 200 daily moving average, so that's going to be the critical resistance breakout. A break of support is going to require us to break down below 174, and then we're likely coming down towards these gap fills at 169 and 165. On the ARKK ETF, we were up 1.27% today, and we're very close to the next price target right there at 45.7, and if we break out above that, we're very likely going towards this gap fill just below 49. If we get a rejection, we need to hold support at 44.5 and 43. Otherwise, we could come back down towards this gap fill and support zone at 40 to 41. On the VIX, we were up 1.85% today, and I think there's a very good chance the VIX is going to bounce off of the support zone, which is done all year long between 12 and 13, and likely start spiking higher towards 15 to 16 and possibly even as high as 18 during the pullback. Now, keep in mind that is not bearish as long as the VIX does not break above 18 to 20. That is simply just volatility during a pullback, which is completely normal and very healthy for all bull trends. On Bitcoin, we're currently down just over 1%, and Bitcoin is looking like it's struggling a lot to break this resistance just below 38,000. And if we do continue getting rejected from here, it's going to look like a double triple top on a breakdown below this support at 35,000. A break of 35,000, if we cannot break this, will look like a double triple top. That'll take us down to 32,000. If we hold this support right here at the rising 20 daily moving average and break that support at 38,000, look look for the next price target higher at 40,000. On Tesla stock, we were up 0.27% today, and Tesla is also building out a very well-defined wedge as we wait to see which direction we're going to break out, and we do have a gap to fill down here at 225. I think there's a good chance we do fill that gap and test the support at the rising 20 daily moving average, but that doesn't guarantee we will, and if we're going lower, we're going to need to break this support between 230 and 232. The next bull breakout will be above 244, and then we likely go higher towards 255 and 262. On Apple stock, we were down 0.09% today, and Apple is starting to look like it has a pivot from the high with 3 red days in a row, all breaking the previous day's low, so I still think there's a very good chance we're going lower to fill this gap at 186 and test the rising 20 daily moving average. We already filled the gap to the upside, but if we do bounce from this support at 189, we are likely going higher towards the previous high at 191.5 and the next price target at 194. So jumping back over to the S&P 500, this is a very vertical rally that could be running out of steam as we prepare to see a pullback to our higher low, which is likely going to fill the gap and test the rising 20 daily moving average. So prepare for a pullback, which doesn't mean it's bearish, it simply means all bull trends eventually need a higher low before they can continue higher, and this bull trend is likely running on fumes as the buyers are getting exhausted, and that is likely going to lead to selling, and bears will likely take that as an opportunity to short to lower prices, which should put in our higher low. Overall, the market structure is still looking bullish, and it still looks like we are continuing a bull trend, which we've had all year long after this 3-month-long correction. So manage your risk around all of these critical levels and make sure you have a trade plan prepared for any scenario, and keep in mind the market can remain irrational, so don't rule out the possibility we just continue to climb higher. Don't forget to take advantage of that bank Black Friday sale, which you can find all of the details in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.